You'll see here with you for another STO video. Firstly, I want to apologize for the lack of videos here. After the successful event that we had that I mentioned in the other STO video, I've had to dedicate my time to the newcomers. Usually when I do, I don't take a step back from posting online. However, I've come under some serious, challenging health complications, let's put it that way. So I'm grateful to be in front of you now, and I will push through it. It is a challenge, but being here is important. The live trading room still has to happen every day. So I'm currently live, London market open, and we finished the month in a positive. So that's a win. Last trading week that we did have, we did 300 plus pips and we walked away with about $700 for the week of trading. So I'm happy for everyone involved there. The reason I'm making this STO video is to share that I don't win every trade. That's the reality. I have had some stopped out from our last STO, but after a win streak, which is bound to happen, you have some losses that do come through. It's important that people see that every day. So that's why we go over the charts. Now, what I want to do with you now is I've had a lot of interest from the bat pattern. So a lot of people asking questions about that, because that's something that I trade quite frequently in the live room. And it's very profitable if done the right way. So I want to take a look at that. So I appreciate you being here. I don't take that for granted. I'm truly thankful and I'm grateful to be here with you always. So let's go to the charts, and if at any time that you want to check out our live trading room, remember it's a 14-day free trial. Link below, you'll get access to all the material alongside the live trading room. It's as close to earn while you learn as I can put it. If you do, I'll see you there. If not, let's take a look at the charts now. So let's take a look at the bat pattern together. It is a tremendous pattern, by the way. It's easy to learn, it's easy to pick up, it's easy to trade, and when done correctly, it does become easy to profit from it. And I want to share that with you just to inspire you that you can do this. It's not that difficult. It's not that overcomplicated, right? You pick up the strategy, you learn it, you test the strategy to see if it works for you, and then you trade it live every single day. Like, that's the process to consistent profits. That's what it takes. And that's it, right? Very simple. Now, this is the pound, what is this? Pound dollar on the daily. I just want to do that. Pound dollar on the daily. And one of the trades, now this is already live, but we've hit target one, right? So this is just from a reason why I want to show you this is just from the live trading room. It's one of my favorite trades, a trend continuation trade. And we had a move down, and we have a move up, and then we have a move back down, and then we just channel sideways, okay? And a lot of this structured consolidation was from the training that we had, right? It's from the workshop that we had. So for those of you who were there and following along with me here, we are trending towards the downside, and then we hit structure looking left, don't we? And then we come up and we retest structure right here. And then we come down and we retest that low. Now what's happening here is we're moving into consolidation, right? So as trend continuation traders, we want extra confirmation from this. So I'm waiting after price action is consolidating here. I'm waiting for a break, and we do get this. Again, I'm showing this because this is exactly what we do in the live room every single day. London market open. Now we did finally get a move down, and we closed below this low looking left, right? So this indicates to me, again, from the training that you have, this indicates to me that price intends to go lower. Not always. We're playing the probabilities here. I'm half right on these guesstimations, right? Just half right. But that's all you need with a positive risk to reward setup, right? So price intends to go lower here. And then in the live room, I was waiting for a pullback back up into, and we get our sell, right? So we sell it right here, and we had stops above our highs, and then we had targets right down here and a retest of the low. And sure enough, we get that. So that's a really, really good trade. So we enter the trade here. We come down and hit target 1. Now, where is target 2? After we do hit target 1, we take off half of the contract, roll stops to break even, and now we're in a risk-free position. Okay, so where am I looking for target 2s here? After target 1 has been obtained, now I'm looking for an extension from that move. So I'm going to take this high and this low. Okay, now let's go from swing high to swing low, back up in. And what I'm looking for is a 127. Oh, my camera's hiding that. A 127 Fibonacci extension. So I'm looking to project here. Where is price action most likely to go to if we get a move past this level right here? Okay. Now, if we do, then I want to take off the balance of my position. Okay. So if price action does move all the way to the downside here, I want to get out at a 127 Fibonacci extension, because if I draw a line tool right here and we scroll out like this, you can see that we are coming in at another level of structure. We've got a test here, 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 almost here and here. Okay. Then we got one in here and one in here. So as price action comes down into these structure levels, structure pulls price. It acts like a magnet, right? As price action comes down into this structure level, I want to get out of it, right? Because the significance of structure is telling me that when price action hits that level, it tends to react, right? So if price action comes down and we get a reaction and we move in the opposite direction, then it would make sense that I get out of the position, right? Now, yes, okay, of course, it can move on and go lower, right? But you can go and test that. Multiple exits, yes? With this one, I want to get out of it, right? Target 1's obtained, and if we get price action to move all the way down, if it moves all the way down in a target 2, we want to get out of it. The structure signals to us that it will react at that point. So think like the other trader. If other people are coming in to buy, then I want to sell my position to them and just get out of the trade and continue to play the probabilities. Just an example that I wanted to go over here before we head to Kiwi Yen here. I'm watching some pattern trades here. So what I'm going to do is get rid of those, because this is on the daily time frame. What I'm doing now is jumping down to the 4 hour. Okay. All right. So 4 hour. Now there's already been a pattern win in here. So you can probably see it from a W formation here. We have an impulse leg like this. Price action comes up. We come back down, and then we get a CD completion right there. And it looks something like that. Okay. So, that's already a Fibonacci retracement here. Swing high to swing low. You see we've got the 50%, and then we come up into the 886, not on a dime. Just that's why it's important that we front run our orders here, because you want to make sure that you get filled. And if not, well then, you count that as a missed trade and you move on to the next one. And which is exactly what we're going to do. So that looked like it ended up being a really good winner there. Now, the new opportunity that I want to cover today is from this low, okay? So we have our swing low to our swing high right here. This is the impulse leg I want to pay attention to. So what's the first thing that we need is, oops, no, not to do that. First thing that we need is the pullback to come into a minimum of a 382. Now, we do get that right here. So Fibonacci retracement, swing low all the way to swing high. So the minimum was a 382. Do we get that? Yes. And then we come into the 50%. So this here signals to us a potential bat pattern. Do we hit the 618 in this instance? No. Therefore, it's not a Gartley pattern. Because if price action did come all the way down and touch the 618, this potential trade opportunity is no longer a bat pattern. We would be looking at a Gartley pattern for this one. Now, we get the 50%, okay, so we're on bat pattern alert. The next thing we need is another 382. So Fibonacci swing high down to swing low. We need another 382 hit right here. Do we get that? Yes, we do. And then we come all the way up into a 50% right there. The last thing that I want to look at now is a potential move towards the downside. If we do get a potential move towards the downside at 86 100s, then I'm looking to buy it up here, okay? If we continue to get a move higher, well then, you know, this pattern right here that we're looking at is no longer valid. This bat would become invalid if we get price action pushing all the way above this high. So let's not focus on that right now. Again, if it does, well then, you know, this pattern, we no longer have to look at it. Now we get this move, which is our C point right there. Now, if we stay below this high, okay, if we stay below this high, then this is still valid for us. What we need is a CD completion all the way back down into 86. So it looks like this. Get rid of that. Fibonacci retracement, swing low all the way up into swing high right there. And now what we're looking at is an 886 Fibonacci retracement from this low, from our initial impulse leg. So if price action moves all the way down into an 886, again, we front run, just like our previous example. If we come down into the 886, then we're looking to buy, okay? So that is where my buying opportunity is, right there at 86, let's say 05s, okay? 8605s. And the bat pattern would look like this. Triangle tool to make it look nice. X to A to B, B to C, and C to D right there. So this is our potential bat pattern trade on the Kiwi Yen 4-hour time frame. Excuse me. So where are stops and targets going to go? Well, let's follow the rules. Same rules in the education material inside your platform that you have access to. It's the same every single pattern. A Fibonacci retracement, swing high all the way down to swing low right there. So here was our entry. Let's go like this. Here is our entry right there. Let's clone this and move this up. So 382 would be our target. So we're going to make that green. And let's clone that again. 618 will be target 2. Okay. So again, we're front running. Front run your entry here and your target here and your target here. If price action moves down, giving us a CD completion, we buy it up there. We're looking for targets here at the 382 and then 618 for target 2. Target 1 and target 2. Okay, so now you have your entries, then you have your exits. You have your targets. So what if we are wrong on this trade? Because disclaimer, we don't win them all, do we? No, we're playing the probabilities. Again, we're half right on these. But if we're half right with a positive risk to reward profile, which is what you see right here, you are going to do really well for yourself. Now, what does that positive risk to reward look like? We have our entries, targets, stops go below your X point looking left down here. So if price action moves down, continues to move down, and we press below this low, then we want to get out of this trade. Okay, simple as that. That's the significance of a stop placement. What the stop tells the market is we were wrong initially on this guess. Okay, we were wrong on this move. So remember, cut your losses. Well, that's why we use the stop placement. Yes? So our stop will be, let's clone this like that. We are going to move it down past our X point looking left. So if price action pushes down, we want to get out of this trade because we were wrong on this move. So now the trade will look like this. So we have just over a 1-to-1 risk to reward, which is important. And then we have target 2, which is, I don't know, 2.5-to-1. That's a positive risk to reward. So, if you take a strategy like this and you test it for yourself and you find that if you continue to take this trade on the Kiwi yen on the 4-hour time frame, that you have a positive expectancy, again, you will become a consistently profitable trader if you do those steps and continue to trade it in this way. That's what I mean by the correct approach. If you trade the bat pattern in the correct way and you do it like this, the attainment of what you want out of trading is inevitable for you. I can promise you that. I've been through it. I've done it. My mentors have. Hedge funds still do the same process. Prop firms still do the same process. Professional traders do the same process. Professional retail traders do the same process. And my clients are also going through the same process. And they also have success. They see the results. It cultivates that belief. Now they can do it. And that's, again, why we trade live every single day. So we take all of this that you see and execute it in a live market environment. And then we document the trades together. And now you can start to see and have faith in what you were doing is actually going to get you results in your trading, right? So if you do like the patterns, be sure to continue watching my videos that come out, because I want to put together another workshop and actually start teaching you the patterns that I hold close to my heart, because patterns pay, and they are good, again, if traded the right way. So if price action comes down, we have a valid opportunity. If price action does continue to move higher past this point, then it's no longer valid and we want to get out. Okay? It's no longer a trade, so you delete your analysis there. So that's potential bat pattern trade on the Kiwi yen if we're going to move back down, looking to buy it up into target 1 and target 2. And if we get a press down lower, then we just cut it and get out of the position. Sound good? All right. So that's what I'm currently looking at. It's not a long video today, but yeah, time to push through some of this chronic health challenges that you and I always face, and to continue to serve you in the best way I humanly can, because I wish you nothing but success. You not only need it, but you deserve to have it. Again, if you like this style of trading and want to see it executed in a live market environment, I'll leave the link for that below. If it's not for you at any time, easy to stop the trial and just get out of it. I made it super easy for you to do so. Now, start getting the results that you do want for you today. I highly encourage you to do check it out. All right, until next time, be safe, enjoy life, and I'll talk to you soon. Thank you so much.